Michael asks, here's a question for you, Matt. All the doomsday forecasters are predicting the destruction of the dollar. How would you suggest protecting the long-term value of an investment that is currently in the form of stock in our Roth accounts? Microvision has a great upside potential, perhaps as high as $500 a share, up from the average purchase price of $3. What happens when I'm paid for cashing in a share and the dollar value is comparable to what happened in Zimbabwe in 1994? Am I screwed, or is there some way to protect me from this happening?
Michael, thanks for the question. If you are concerned about inflation and you are concerned about the devaluation of the dollar, one of the things that I would encourage you to do is to diversify at least some of your wealth into buying and holding rental properties, because, for one thing, they are already indexed to inflation. They have a built-in hedge against inflation, because as inflation goes up, so does the price of property. As inflation goes up, so do rents, okay? And you're renewing your leases every year, right? So you've got a built-in hedge against inflation there, and if you're concerned about that, that's a really, really good way. It's one of the few investments that has a built-in hedge against inflation. So thinking about diversifying at least some of your wealth into deeded freehold real property is a really smart thing to think about. And I want to make that distinction between deeded freehold real property. I'm not talking about real estate backed securities or other types of paper assets that are very different, okay? So that's the first thing. The second thing is that it sounds like you are speculating a lot, and you're looking for speculative types of investments, or you have some speculative types of investments whereby they need to go up in value in order for you to make money. If they do, you make money. If they don't, then you don't make money, and that kind of stuff. And I don't think there's anything wrong with doing some speculating, but I would encourage you to maybe create a particular percentage or portion of your net worth that you're going to put towards these more speculative investments. There's potentially high returns, it sounds like, on I know nothing about this particular stock you're talking about, but it sounds like you feel there are some potential high returns there. And so there's not necessarily anything wrong with putting some money into a high speculation sort of bucket and doing some of that. But I would encourage you strongly to consider putting some of your wealth into less speculative investments. And one of the things about residential investment property is that, especially if you're buying performing investment property, is that it's already, if you buy based on real estate fundamentals, okay, if you're buying property at the right price in the right market and there's a high rental demand and it's already performing, then there is already a predictable stream of income. Obviously you have to account for vacancy and maintenance and everything, but assuming that you factor those in and assume those things and do your cash flow analysis accordingly, whether the real estate market goes up, whether it goes down, your stream of income is going to be very consistent. And so I would encourage you to think about investing in some things that have a residual stream of income that actually do make you money every single month, regardless of whether the value of the asset itself goes up or down. And think about putting some of your wealth into that type of a bucket, if you will, in addition to maybe some of the other stuff that you want to do as well, and just kind of diversifying your portfolio.